This video and all other videos on this channel for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I'm going to talk about two things. First of all, I want to talk about liquidity. Printer is coming. I want to have a quick discussion on this because I keep seeing things like this. Reverse repo down. As soon as this is drained, printing will be initiated. We see this all over the place all of the time. I'm sure you see it as well. Printer is coming. I'm sure many of you watching this believe printer is right around the corner. But I actually believe this is akin to a Psyop. And I'm going to explain why. So we're going to run through a bunch of these. I'm going to explain to you why I think it's a Psyop. And as I'm running through each one of these points, I want you to ask yourself if what I am saying is actually reasonable. Because I believe what's going on here is people just don't understand what they're looking at. And what they're doing is, without engaging their brain, without performing any critical thinking at all, they're just seeing something like this, hitting retweet, and then regurgitating the narrative that printer is coming. But I've got a whole list of reasons as to why, number one, it's probably not coming anytime soon. And number two, I can back this up because there's a mechanism behind this, right? There's a reason I know printer is not just around the corner. There's a reason I know that once this is drained, they're not just going to immediately return to outright printing, okay? So I'm going to share that with you so that we can hopefully together stop rehypothecating this psyop that the printer is just around the corner, when in fact, they are going to be both late and reluctant to print. Also, we need a very, very, very different set of conditions and circumstances to what we have today before printing even becomes a discussion. And then for the rest of this episode, what I want to do is review the scenarios I presented earlier in the week for Bitcoin and see if we can scratch any of them off, see if we can slowly but surely start to move our way towards returning to having a much clearer read on the market and a normal understanding for what is to come for Bitcoin and the stock market et al. So kicking things off, reverse repo is nearly drained. That is objectively true. And when it is drained, there's a chance that they're going to want to replenish it. Now, again, I want to really reiterate this point, okay? No matter what your current beliefs are about printing, no matter what you think you currently understand, I just want you to hear me out and then ask yourself if what I'm saying sounds reasonable. Don't take my word for it. If you don't understand something I say, go and research it. But put whatever prejudice or belief you currently think you hold aside and allow me to just point at things. And again, I want you to be really, really critical in the thinking here. Ask yourself if what I am saying is reasonable or not. Because the idea that we're going to get to zero and then this thing's going to be full printing again is ludicrous. We can see straight away. We spend a lot of time doing this. Why is it then that suddenly it's become accepted that the moment we get here, we have to start printing again? Why? I think a big problem with the reason this whole thing is presented as a psyop that people never question, they just accept as reality, is because most market participants either joined around C19 or after C19. But if we just have a quick look at what happened during the C19 plunge, it does not look like any other recession that we've ever seen. Nothing about it was normal, and nothing about it should be treated as normal or a base case. If we go back to this C19 plunge, this happened quicker than any other recession ever in history. It was also met with a record amount of QE at the bottom, which again, not seen ever before. They printed something like 85% of all dollars that ever existed in something like 18 months. And you can just see, just by eyeballing this, go and find me another recession that happened this quickly. And here's the important part, that was met with a QE bomb that then reversed in a V-shaped recovery and went on to produce these enormous returns. This is a complete outlier, and I completely understand that if you got into the markets anywhere around this time, and this is all you've ever known, then it makes sense to you that when stuff goes wrong, when stuff hits the fan, we're going to see a big crash, and they're going to step in because, quote, they can't afford a recession. We'll get to that in a minute. They're going to print this thing back up, and this is business as normal. But again, if you go back and study all of the prior recessions, every one we've ever had, what you will notice is this is the only one that looks like this. It's the only one. And whilst the money printer is a relatively new thing, okay, we saw that really that was birthed out of the 2008 GFC. But if you go back and look at historic crashes and blow-ups and things like this is what they tend to look like. Long, drawn out, 12 to 18 months, up to 24 months perhaps between the top and the bottom. And it often takes quite a while to recover those highs. It takes a long time, many, many years before those highs are taken out. Versus when we go back here, this, with the bazooka of money, absolutely not normal to be expected. In fact, even this 2022 bear market was much more typical, right? It was an orderly walk down, lower highs, lower lows. It took about a year top to bottom, And notice it wasn't met with a bazooka of money in QE infinity, okay? And yet it still resolved to enormous performance. So we have to keep that in mind, right? This is not normal, nor should it be your base case. And I do appreciate, as I said, if you only got into markets around here, then you think this is normal. But again, if you go back and study, this is absolutely not normal, nor should it be your base case. So the next point I see a lot, which I think feeds into this whole Psyop, right, is the Fed or the government can't afford a recession. I see this all the time. Well, they can't afford a recession, Camel, so we won't have a recession, right? This is, I don't know where you get this from, but this is nonsense. What this kind of implies is that they sit around in some room and they go, do you think now's the right time? Or, yeah, okay, I think we could afford the recession. Okay, engage recession, right? Press the recession button. That's not how this works. And as soon as you engage your brain and really start to think about this, why did this happen here? Was this bear market because they could afford the recession at the top? No, it was because liquidity dried up, a bunch of stuff went wrong. What about back here? Was this because they were in a dark room somewhere, sat around going, I think now's a good time, now we can afford a recession? No, of course not. This was a huge deleveraging and a massive unwind because things went bang. And when things go bang, more and more leverage unwinds. In the case of 2008, of course, it was a subprime mortgage collapse. When we go back to the prior one in the dot-com bubble, what happened here? Do you think they were in a dark room somewhere going, oh, now seems like a pretty sweet time, right? I think we can afford it. I think it's pretty comfortable, right? I mean, that's just not how the real world works. Things blow up. And when things blow up and go bang, we enter a bear market. The bear market exposes the leverage. People that are over leveraged are wiped out by the volatility and the downside, because nobody manages risk during a massive bull market in a bubble, and that causes more and more things to blow up. So this whole idea that we can't afford a recession and that's why we have to print, right? You know, it's just not how the real world works. Things go bang, leverage is exposed, leverage is unwound, it creates bear markets and recessions. So it's nothing to do with being able to afford it or not afford it. The next point that we have to make here is we have to ask ourselves the question. And again, I just want to pause here to say, ask yourself if what I'm saying so far is reasonable. Is what I'm saying delusional? Is what I'm saying unfair? Is it unbiased? Or is it just objective and reasonable? Is it reasonable for me to say these things? I think it's totally reasonable. Now, the other question we got to ask ourselves is, where are the markets right now? Because as far as I can tell, they're at all-time highs or very close to all-time highs. Can you pull up a chart like the stock market or like Bitcoin and find me an example of when all the markets are at all-time highs and they come out and say, you know what we need right now? Massive liquidity injections. You know what we need right now? An outright return to QE. Fed balance sheet expansion. Okay? Again, respectfully, and feel free to challenge what I'm saying, but this is not something we observe. There is no reason to suspect with the stock market, how many percent is this? Probably like 1? All right, 2.5 approximately percent off of the all-time high, with Bitcoin currently trading 6% off of its all-time high. And right now, what, we need to print money? Right? I mean, again, this is why I sort of mentioned that this might be perceived as a psyop. It's like, how have we conditioned and programmed so many minds into this mass psychosis where all of these become the base case for investors? None of this makes any sense. None of it is founded in reality, and none of it has any precedent. Okay, we've never seen it before. To say they're going to print money at all-time highs makes absolutely zero sense. Even going back to here, okay, what did we observe? We observed a massive crash. Okay, remember, being driven by an outbreak of something that we've never seen before that had massive uncertainty. Also, during this time, they locked the entire world down. They ground the economy to a total standstill. And it wasn't until after the damage had been done, it wasn't until after a massive risk event that printer eventually showed up. But they did not step in anywhere near the all-time highs. And again, I want to point at this and say this is not normal to be expected, because unless they shut the entire world down again, then there is no rhyme or reason to expect them to step in this fast once more. So then, of course, the question becomes, well, RRP's being drained, so they have to print, right? And again, it comes back here and we can say, well, no, it can go sideways forever. They don't have to return to printer. And the argument that, well, liquidity needs to be provided to markets is actually not true either. Liquidity doesn't need to be anywhere. Liquidity can dry up, and if liquidity dries up, then we can enter a bear market. That is exactly, by the way, what happened here. That's exactly what happened here. The Fed moved to QT and balance sheet runoff, tightened conditions, and we entered a bear market. What about for Bitcoin? We saw the exact same thing. There's a very high probability that Bitcoin would have continued to run well into 100K and beyond here. Okay, but the reason, or one of the reasons it didn't, is because the Fed stepped in here and started to perform QT. Balance sheet runoff. This was the onset of a liquidity shock. This was where everyone was saying printer will go bear forever, and in fact what we saw was liquidity dry up, causing a bear market. So to say that RRP is being drained, they must print, and liquidity has to be provided, right? The truth is, liquidity has to be provided, otherwise we enter a bear market and a downside scenario. But there is nothing on this earth that suggests we have to see liquidity come in. As I said, we have seen this before. When liquidity dries up, we tend to see tops come in and bear markets unfold. And it is also very, very important to point out right now that we are still in the middle of quantitative tightening. We haven't even paused QT yet. They are still performing quantitative tightening. They are still running off the balance sheet. And just like how with interest rates, okay, we're all familiar with this, I would assume, okay? They hike rates, they pivot to a pause, they remain paused for a while, and then they cut. And then they pivot to a pause, they remain paused for a while, and then they hike, right? And then they pivot to a pause, and the thing goes round and round and round. The same is true of QT, okay? They perform QT, they pause, and then they perform QE, and then they pause, and then they perform runoff, right? And then they pause, and they perform expansion. This is how it works. And right now, we are still in quantitative tightening. We are still tapering the balance sheet. Before we can even get to a stage where we can put QE and balance sheet expansion on the table, we first have to observe a pivot. We first have to have the Fed come out and say, you know what? We think we're done tightening. We just want to back off, move to a pause, and then we'll see what happens from there. But so far, we haven't got that. And again, it speaks to us being a lot further away from seeing printing than people would have you believe. So once more, I want to pause here before we do this last little bit and just ask you, is anything I've said today unreasonable? Or are there many, many narratives out there that just don't make any sense whatsoever? Are there many, many narratives out there that people love to regurgitate without actually engaging their brain first? The last thing I think we need to consider about this liquidity and printer is coming idea is the current backdrop and narrative. Currently, inflation is sticky and above target. I know for the Camel Crew, we don't really believe the data. I know for the Camel Crew, we're quite contrarian in our stance because we expect disinflation soon, followed by ultimately a short period of asset price deflation. But that is not consensus in the market, nor is it the mainstream narrative. The mainstream narrative is inflation is sticky and we're above target. Rate pauses are still getting put on the table every FOMC. We actually might even be seeing a pause at the upcoming FOMC at the end of this month. Every time J. Powell speaks, he's clearly in no rush to loosen monetary policy. He's in no rush to drop rates rapidly. He's in no rush to risk inflation continuing to stick and tick up anymore. The Fed has been very stubborn about returning inflation to normal. And you can see as well, because they probably keep revising the jobs data so that they can hide the fact they're overly restrictive in their interest rate policy because of how focused they are on this inflation data. So it seems very unlikely that the Fed is going to pivot to massive printing again. Whilst we've got a stock market and markets at all-time high, whilst we've got inflation being sticky and above target, whilst we've got allegedly monetary policy that's appropriately restrictive, and whilst we're still in the middle of QT, right? We've managed, this is objective reality, remember, we have managed to have Bitcoin run from a 15K low to over 100,000 in just a couple of years with overly restrictive policy and QT running in the background, right? That's just objective reality. We have had the S&P 500 put in two of its best back-to-back years in the face of running QT and Fed balance sheet tapering, right? So the idea actually that monetary policy isn't overly restrictive is kind of supported by what we're seeing here. Now, I know there's been a lot of stealth QEs. I know we've had reverse repo. I know we've had the BTFP. I know we've had hide the bailout, the FDIC balance sheet expansion and all that kind of stuff. I know there have been stealth QEs running in the background. But again, the objective truth is we have been tapering the balance sheet, performing QT, and we've had very, very elevated interest rates. And the market has still done just fine. It's actually done stellar. It's done fantastic. So why would we then have to be starting to entertain printing, liquidity, printer go burr, any of this stuff, right? As far as I can tell, it does not make a single iota of sense. The reality is they will likely need a crash and for inflation to fall rapidly, of course the two go hand in hand, to justify printing, right? Printing is usually the last resort. As I said a million times, QT ends first, then we move to ZERP, okay, slashing the interest rates all the way down to zero, and then finally QE and Fed balance sheet expansion is a weapon of last resort. We don't want to use this if the other two levers can be pulled and buoy the markets. Now, I know we've got a change of president soon, and there could be a good chance, I think, that he's going to do everything in his power to slash rates. But ultimately, he doesn't have a great deal of control over them, right? Because the bond market in aggregate determines the yields on the 10-year. And then, of course, the Fed just follows, or tries to follow, what's going on in the bond market. So maybe they can slash rates. And if they do, then we start to head closer and closer to eventually seeing a printer come. But for now, it doesn't seem at all founded in reality, nor does there seem to be any historical data or precedent to go by to expect this printer to show up anytime soon. Now, let's be really, really clear. On this melt-up chart of mine, the entire time, in pink, has had market finally bottoms when the Fed launches record QE of 10 or 20 trillion. So it's not like I am in the camp of people that says we are never getting the printer. We absolutely will see the printer return eventually. But based on everything I've showed you, it doesn't seem like it's close. It doesn't seem like the Fed is going to want to print, and it seems like they're going to be very, very late and reluctant to print. And I've been speculating the entire time, this QE is not, we're not even going to be close to that until we've seen some 4-year cycle lows for Bitcoin around 2026, right? The end of 2026. So we'll finish this section as we started, okay? Just ask yourself, is what I've said today reasonable? Is it founded in reality? And why is it so acceptable for people to just spout and regurgitate stuff like this when there's absolutely no reason to think that that's even close to the truth? We can, of course, use signs to benefit us, okay? Once we see a pivot from QT to a pause, once we see the tapering pause, that is typically front run by markets. We can use that to our advantage to say, okay, we're getting closer to seeing liquidity injections. If we do get a change of government and the government starts to implement policies, slashing rates, if the bond market respects that, if we see the yields come off, okay, rates lowered all the way to zero again, you know, historically, this person did a good job at that and markets responded very, very favorably. But at the moment, you know, everything is fine. Everything is fine with very restrictive policy. So to think the printers come in is absolutely not correct. And to finish off, as promised, I said that we would go over these 5 Bitcoin scenarios and see what we've got. So the first Bitcoin scenario was this big head and shoulders. We were talking about this and we were saying maybe, just maybe, if this is for real, then what we'll get is some kind of nosedive here. And we have to go all the way back to 73, 75K, something like that. Based on Bitcoin at the moment, it doesn't look like that's what's happening, right? It doesn't look like that's what's happening at all. The second of the 5 scenarios we proposed was this kind of spring and then a push off. And I think so far, we're actually already outpacing this, aren't we? Because that's the 102K high. And if we hop back into this chart, that's right there. So far, it looks like this is the most likely outcome and the head and shoulders may well be off the table. Scenario 3 was that we might have to do this range and this chop for a while, which I don't think we can discount just yet, because we could certainly see this up to that weekly cycle low point and then off we go. That's still very much on the table. Scenario 4 was that we were going to maintain ourselves inside of this pitchfork on our way down to a weekly cycle low, which would look something akin to this, right? All the way down weekly cycle low and break out. But I think based on what we're seeing at the moment, that's not in play either. In fact, if I'm to add a pitchfork here, you can see we have clearly broken out of this. So far so good. I think what we can say is we can scratch off the pitchfork idea, okay? I also think we can scratch off that head and shoulders idea from the start, leaving us with this idea that we've either completed a Wyckoff spring and are about to emerge into strength. I still think we have to leave the range on the table. And the other scenario that I think we still have to leave on the table is that day 70 cycle low that I proposed. I was talking about perhaps moving the arrow from here to here and having a day 70 cycle low in play. Maybe, just maybe, this is what's going on. And maybe that's enough to also force the weekly cycle low early. So I still think we need to leave that on the table because as you can see from here, okay, all we've got to really do is print a higher high close, okay, something akin to this, above 102K, higher high close, higher lows, and start to break out. And this will become the base case. That will look an awful lot like we found the weekly cycle low early. Or perhaps even that we're going to get some very quick snap to the upside followed by a nasty correction down into that weekly cycle low. But of course, the good news here is just a few days ago, we started with about 5 scenarios on the table. And I don't like having 5 scenarios. As you know, I like to be binary. I like to have an upside scenario to say, for example, we're going to move higher. And I like to have an invalidation level to say, if that's true, we should not trade below here. And if we do, then we have to put downside scenarios on the table. Because it's a market and anything can happen occasionally, we have to put more scenarios on the table. And this week, of course, has been one of those times. But already we've gone from having those 5 scenarios to, I think, 3. And really, I think of those 3, 2 of them are one and the same. Because if this is a day 70 cycle low, it resolves to higher highs and happy days. If this is all some kind of big Wyckoff thing with a spring, equally, it still resolves to higher highs. So it's basically the same deal. Which means the only scenario we're left to have to scratch off here is the big range. Have we got to do some kind of big range, some kind of big chop like this, all the way into that weekly cycle low time frame early March? And it also tells us we are yet to find the weekly cycle low. But I really like the fact that already we've gone from 5 scenarios down to 2 or 3, depending on how you want to frame it. And all it will really take is some higher high closes above this 102K level to start to say, this move is for real. We should expect higher highs and higher lows. So we will find out, right? We'll continue to check in on this one day at a time. As and when we can rule out some scenarios, then we will rule out some scenarios. As ever, we'll be open and flexible to all possible outcomes. But like I said, I'm really happy that we've already gone from 5 to 3 or 5 to 2. I am, although currently not in a trading long. I've got my spot position, of course, in Bitcoin, but I don't have any trades open for Bitcoin at this moment in time. But I am positioned for this via the crypto-related equities So if this thing is to rip, if this thing is to do this, then we will still print money from the crypto-related stocks that we've been tackling in the members section. So going into the weekend, that's really all there is to it. It looks like it's pretty much now or never. It looks like we're going to get an answer, because if we reject below 102k, we can't close a daily candle above, then for me, the base case is still that we got to chop around and waste some time until we can find that weekly cycle low and reverse. However, as I've said a million times, but it is what it is. If we break above 102k and flip it into support, then we're bullish, okay? The low's in, whether you want to count it as day 56 or day 70, that's entirely up to you. But all paths lead to higher Bitcoin prices once we can break above this 102k level, change the behavior, change the market structure, and look for higher highs to come in. So we should probably get an answer today or this weekend, I would have thought, right? It seems weird that we're just going to freeze here, trade like this. That would be, I don't think that's on the table. So I think, yeah, we're going to get rejection and waste some time, or we're going to break out. And whichever one of these two we do, we'd have narrowed this thing down from 5 possible scenarios to 1 in just a few days, which is really, really nice. I was kind of thinking it might take a little bit longer than that. But either way, we've done well because we are still positioned to catch this no matter what happens. I just want to check the dollar. The dollar looks like it should be about to make a daily cycle low in reverse. We'll see. Look at the yields coming off. This is nice. This is good. This is encouraging first signs. Okay, we do need to see this break down. But again, it looks like we may well be setting up for something akin to this, doesn't it? And if we can get that, then wow. Wow, 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 wow. And the stock market is also kind of at a critical inflection point. If we break out, then we could probably confirm we got a weekly cycle low in. And we can also probably start to invalidate the yellow squiggle of mine. But if we reject here and continue to kind of chop around and then break down into that weekly cycle low, then again, this whole yellow squiggle of mine still seems very much in play. I'm noticing the NASDAQ still can't quite break out. And we could be stricter and draw it like this, in which case it's got even further to go. But maybe that's coming soon. The Dow Jones did look a little bit better. It looks a little bit stronger. But it probably does want to backfill this gap before it can move higher. And the precious metals are doing precious metal things, right? We're ready to catch this. We've started building the exposure to the miners in the members section. It looks a lot to me like what we're about to do is confirm a very rare but bullish pattern, which is a timing-based weekly cycle low. This is where the weekly cycle low, I know a lot of people will want to label it here, but the weekly cycle low, occasionally it will form from a timing perspective, and if it does, it just means that buyers are refusing to allow this thing to drop. I still believe this is very central bank driven. I still believe this is entirely central bank driven, in fact. But out of this weekly cycle low and daily cycle low that should be due any day now, early next week, let's say, I really do think we're going to get like a breakout retest resumption. And I believe that silver and the miners are going to lead this move for the first time. So going to be continuing to... I mean, we nailed this move as well. We nailed and this one. So yeah, I mean, this is breaking out. This is the senior miners ETF. So I would imagine the members and I are going to be capturing this over the next couple of weeks. And I'm excited to see where this can go because I really think gold is going to snap above 3K. I think silver is going to run that $50 high. I've been talking about this for a long time. For anyone who's been a long time viewer of the channel, I was talking about getting into Q1 this year and seeing $50+ silver and 3K gold, and I really think that is, I think we're here, right? I think we just need to confirm this breakout retest resumption, mark this as a timing-based low, and then for the first time in a long time, I expect silver and the miners and stuff to start to outperform. So we've been lining this up for a long time. We're finally here, and no one cares. Notice how nobody cares about nobody cares about gold. They're like, yeah, wow, boomer rock. Yeah, wow, Bitcoin's going to demonetize it. All of this stuff. Well. Yeah, we'll see, right? We'll see. But I think we've got a very, very nice opportunity in front of us here. 102k printed as we're speaking for Bitcoin. So not much higher to go, right? About $700, and we get to write off another one of these scenarios, assuming we can close the candle out there. So loving what I'm seeing. I suspect some of these positions like Coinbase will start to print for us if that's the case. So we'll see, right? We will see what's going on. Anyway, have a fantastic weekend. If you made it this far, thank you. Thank you for listening to me waffle and ramble. I'm wishing you all the best. Other than that, have a fantastic weekend. God bless. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us normies on a